as October's gotten underway, the dollar's declined a lot. Just, we're 2 weeks and a day into October, the dollar's fallen significantly. The euro dollar is up from mid 131s all the way up to 139 last night. The Australian dollar is almost 1,000 pips off its low. These are moves that are really kind of unheard of, to be honest with you. So I consider them extreme, and we are at levels that are considered strong resistance, which we'll get into in a moment. And I would look for the next few weeks for some dollar strength, to be honest.
So the last time we spoke, you talked about the Australian dollar being kind of in a rally mode. What are you seeing now?
Yeah, well, we were coming down into a level which was huge support at the time. It was former resistance. It was the 94 area. Okay, we made a low at about 93.87, and we've rallied again to 103.72 last night. Okay, now that level's big because if you look at the trend that's defined by the channel off of the top from basically August, that level runs into the trend line, basically to the pip today. Okay, the 200-day average is also at 103.75, and you've got a lot of resistance up around 104 from former highs. So all that confluence of all those levels should really be an impediment to further gains in the Australian dollar. I would look lower near term back down to say parity, so the one figure, more or less, currently at about 102, I think. But that gives a nice trade idea, I think, for the Australian dollar over the next week or so.
Great. And the euro, you're seeing some clarity there now, right?
Yeah, the rally from the low is clean. As a technician, I look at Elliott wave patterns, and we would say the rally from the low is a clean, completed 5-wave rally. Okay, so what that means in the near term, say over the next few weeks, is that we should get a sell-off that gets into the mid 135s area. Okay, retraces roughly half, if not a little more, of the rally from the low. After that, there might be actually a bullish opportunity. We have to wait and see what the short-term picture says, how that decline unfolds. But going forward, through the rest of the month, I would look lower towards the 135.64 point is actually a level that should be structural support.
Great. And okay, so now looking at the Japanese yen, you're seeing a lot of volatility there right now.
Right. The Japanese yen has been dead for like 2 months. It hasn't gone anywhere. Okay, if you were trading this thing, you were probably frustrated unless you were trading it for 1 or 2 pips. But we had an initial kind of breakout move. And a lot of times when markets are this quiet, the first move is the wrong one. So you get that move higher in the dollar yen. It was kind of on rumors of Ministry of Finance intervention. Okay, sure enough, we've retraced that move almost entirely already today. So I think that level, if I'm right, I think that level, the high recently was about 77.50. So currently we're probably about 100 pips below there. Short positions against 77.50, targeting a breakout to a new low and the 74 area.